Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, getting tough on trade, Apple suppliers may consider moving iPhone production away from China if tariffs on U.S. imports rise. What does it mean for Apple's supply chain, and will other companies follow? Plus, turn up the volume. Tencent Music racks up more than $1 billion in its U.S. IPO, pricing shares at the bottom of its marketed range. How China's largest music streaming service will impact the global music industry. And growing Amazon backlash. Employees in New York City have launched a new push to unionize as the tech giant attempts to gain support for its expansion. But first, to our top story. Rising trade tensions between the U.S. and China have Apple suppliers prepping for some unfavorable scenarios. That could mean moving production out of China if tariffs rise to 25%. Remember, President Trump told the Wall Street Journal last month that tariffs could be slapped on smartphones and laptops made in China. To discuss, I'd like to welcome Dan Ives in New York, the managing director of Wedbush Securities, and in LA, we've got Bloomberg's Mark Gurman, who covers Apple. So, Mark, what do we know about the likelihood of Apple moving its production out of China? What would this even look like?
Right. At this point, it does not appear to be very likely. Quite frankly, we will probably get more clarity as we know how much longer this administration is going to last. If there's indications if the next administration, whether that's in 2 or 6 years, is going to continue these tariffs, if we actually see them going into place. Right now, these are, plan B, C, and D scenarios that the company obviously is weighing right now. What we're told, this is a report from our colleague Debbie Wu, is that right now, if tariffs are around 10% on the iPhones, if those go into place, there's not much room for panic. They're not going to make any rash decisions. But if discussions begin of a 25% tariff on iPhones exported from China to the United States, that's when there might be some contingency plans going into effect.
Dan, does this mean that Apple views the tariff issue as a more serious issue than we might have thought?
Look, I mean, the tariff issue, it's not just white knuckle for Apple, but for investors. And I think this is something, it's why Cook's almost become a pseudo diplomat, trying to make sure that this doesn't heat up in terms of the tariff, because Apple's front and center in terms of bullseye on its back. I mean, to Mark's point, I do think the likelihood here is very small. I mean, we continue to think better chance of man going on Mars than Apple moving their factory, especially Foxconn, out of China. But nonetheless, this is a nerve-wracking situation, both on the demand and the supply chain, and the stock reflects it.
Right. Tim Cook has been to Washington several times. He has even met up with Ivanka Trump, the president's daughter. Mark, if Apple moved production out of China, let's talk about the BCD scenarios. Where would they move it?
Right. To Dan's point, I love it's more likely we'll have a man on Mars than Apple moving their production out of China from Foxconn. But, other places that we've seen discussed are Malaysia, Thailand, and Vietnam, other countries in Asia that have similar, labor practices and the ability to keep costs down. I don't see a time where the iPhone is produced locally in the United States, but I really think this is going to be more of a wait and see. I think Apple's going to try to wait this one out. But to Dan's point as well, you see the stock price. This is a real problem. This is a real issue. It's a real concern for investors. It's not real in practice yet, but it's clearly real to the market.
And is it, Mark, something that other companies could follow?
Absolutely. I mean, in terms of companies following, we also see companies jumping ahead. GoPro put out an announcement yesterday, we reported, indicating that they're going to start moving some production of their devices out of China. So this clearly is having an impact industry-wide. Apple's lucky enough to have enough cash and money where they could sort of wait this out, whereas a company like GoPro, which quite frankly should probably go private if they're not acquired, they're a little bit in a tougher situation.
Dan, the ban on iPhones in China right now as a result of this dispute with Qualcomm, how serious is that?
Look, I mean, this has really been I think, influx situation. We continue, from everything we see on the ground in China from our contacts, I mean, it is the older version. So, you have to almost separate out between iOS 12 and what's pre-iOS 12. We think only about 10% max 15% of the phones in China are potentially impacted. But look, Qualcomm's doubling down today, trying to focus on, the courts trying to really, force their hand in terms of Apple. And this is something, look, I mean, China is key to Apple's growth prospects. We've seen the softness at a 10R. The last thing you needed was some sort of, further worries around China. And that's why the investors are closely watching this, as, the last thing you want to see is just a further dent in terms of China demand from this latest court issue.
The Huawei CFO being detained in Canada, now being granted bail. Meantime, a Canadian diplomat going missing in China. How concerned are you, Dan, about this having a broader impact?
Look, I mean, Apple has a bullseye on its back, right? I mean, and I think that's sort of the worry, is that in any sort of tit-for-tat retaliation, you look at U.S. technology companies, they're the ones that kind of are ones that, I think right now, that are worried in terms not just from a demand but from a supply chain. I don't see too many U.S. tech CEOs running to book their flights to China over the next few weeks. And I think, take a step back, this is really, this next, call it 30, 60 days, you really see how this goes between U.S. and China. But the Huawei CFO situation throws a wrench in it. And I think you've seen it impact these stocks, as that's really been a black cloud over U.S. tech, specifically Apple. And this certainly doesn't help the situation.
Meantime, we do have Google CEO Sundar Pichai not ruling out plans to get back into China with a central search engine. And, as a result of his testimony on Capitol Hill, you have numerous lawmakers calling for more tech regulation. Dan, are you concerned about the impact on the tech sector more broadly if Congress takes a harder line on big tech?
Yeah, I think it was a concern if you go back to March, April, right? When you went through the hearings with Zuckerberg. And I think that's where there was a big investor concern. Look, it's still a risk, but ultimately I think right now it's more in the background in terms of big tech and some sort of regulatory risk from the Beltway. But nonetheless, I mean, right now it's something, it's been added to an overhang on these stocks, and you've seen it on the FANG names. You go back the last year or two, you never had regulatory risk, and now that's being factored into the multiples. And I think, investors are definitely keeping a close eye on it in terms of what comes out of K Street.
All right. Dan Ive, Wedbush Securities, and our very own Mark Gurman. Lots of stories will continue to follow here. Tencent Music finally debuted on the New York Stock Exchange Wednesday. China's largest music streaming service raised $1.1 billion on opening day. Tencent Music opted to lower its pricing after initially guiding fund managers that orders were coming in around the midpoint of the marketed range. For more, I want to bring in Sherry Ann, host of Bloomberg Daybreak Asia. So, Sherry, what does that mean about the optimism for this company?
So they raised $1.1 billion, selling 82 million American depository shares at $13 a piece. Now, of course, the market sentiment right now is pretty weak, so that was one reason. But Bloomberg Intelligence also saying that this is because there's really less optimism about the global music streaming platforms, especially after the poor experience with Spotify, which is now trading below its IPO price. Still, this was one of the most anticipated IPOs of the year, and good news for Tencent, of course, which before the offering held about 59% of the company. Also for Spotify, which owned about 9%.
What's the significance of a Chinese company listing in the U.S. in the middle of an essential trade war?
That is the key question, right? And something that Chinese companies will really have to look closely at, given that this year we have seen a lot of these Chinese companies listing in the U.S. In fact, Chinese companies raising $8 billion from IPOs in the U.S. this year, which is more than double the same period in 2017. And of course, we have a few big ones coming, including ByteDance, but really a cautious sentiment out there, given the tepid performance of some of the previous IPOs like Mogu, which is a Chinese e-commerce platform. Not to mention as you mentioned, this trade tensions going on between the U.S. and China.
All right, Sherry Ann for us in New York. Sherry, thanks so much for stopping by with that report. Coming up, Is now the right time for Uber to make its public debut? We'll talk about that and the current climate for other startups with Bobby Franklin, president of the National Venture Capital Association, next. This is Bloomberg. Over the last week, we've got new details for what's expected to be one of the biggest IPOs of 2019. Uber has tapped Morgan Stanley to lead its public offering, which could be valued at up to $120 billion. So will this splashy IPO have an impact on private fundraising and public debuts going forward? Here to discuss, we've got Bobby Franklin, president and CEO of the National Venture Capital Association, and Jackie Kelly, EY America's IPO leader. Bobby, I want to start with you. What do you make of the fact that Uber and Lyft are going out not just at the same time, but at a particularly volatile time? Is it a good idea?
Well, I don't know if it's a good idea for each of those particular companies, but I think it's about time, certainly for Uber. I think it's important that we have some successful IPOs. I think venture-backed companies need that healthy IPO market. We need to find success when companies go there, and clearly these are two really big companies. I would certainly like to see changes in the IPO market so it's more welcoming to all entrepreneurs and to all of the 8,000 companies that venture capitalists invested in last year.
So, Jackie, what is the choreography going to be for these two companies filing in the same week? I mean, are they going to be going public on the same day? Like, how does this work?
Yeah, it's a good question, and I think, we're excited, obviously, that a lot of the unicorns that we've all been waiting for are coming to market. It is going to be, masterfully choreographed. I think the most important thing, though, is that these companies perform well. Just like, we want to see some of these hot companies, have a great debut.
Do you think they will perform well in the middle of this larger tech rout?
I think the thing here is that these companies have been preparing for an IPO for a long time. We hear about it now and we're excited about it, but, any of our large unicorns have been preparing for years for this big event. There's been a lot of focus and a lot of attention from the investor groups in them.
And yet, Bobby, these are two companies that are still losing money. Do you see among private companies greater effort to become profitable before going out or create more sustainable businesses earlier on before they open their books to the public?
Well, I hope that's not the case, to be honest with you. I hope we see more companies. Again, I hope the markets are in a place where companies can go to the public markets sooner in their life cycle. I think we've seen such a lack of IPOs over the last several years, save with the exception of a lot of biotech companies. I really think it's important. You know that there are half the number of publicly traded companies today than there were 10, 20 years ago. And if we don't get the public markets in the right place to be, to see some more successful IPOs coming on to the public markets, we're not going to have an entrepreneurial ecosystem as healthy as it should be and frankly could be.
Jackie, how long do you think this tech volatility is going to continue? Is this a new normal?
Yeah, I feel like we've been in this normal for years, actually. The good news is
But if you look at the charts, Facebook lost 35% since July.
You know,
Apple and Amazon are down from that $1 trillion mark.
You know, the great thing is we do recover. And frankly, I think this sector recovers faster than some of our other sectors in volatility. We also have a group of fearless entrepreneurs in this space, and they don't look at the headwinds out there. I mean, honestly, if they're thinking about going public, they're going to probably still charge ahead unless somebody really puts the brakes on them. And frankly, we're working with a ton of tech IPOs right now, beyond the big names, that are still definitely focused on IPOs in 2019.
Bobby, how are these economic conditions impacting private fundraising and private plans among startups?
Well, there's been a lot of capital in the industry. And, you know, obviously the economic conditions have helped that capital formation so that it can be deployed into the entrepreneurial ecosystem. But if you look at the U.S. compared to the rest of the globe, just 20 years ago, 91% of global venture capital dollars went to U.S. startups. And 10 years ago, that number was about 81%. And last year, it was 54%. So we know that capital is available around the globe. We know that markets sort of dictate when capital becomes available. We need there to be a steady stream of capital so that all of these entrepreneurs from, frankly, all across this country as well as the globe have the opportunity to try to take risks, try new things, try to create successful enterprises. That's good for the economy, certainly good for jobs.
Do you think we're going to see a lot of other exits next year, Jackie, or more M&A?
You know, I think, the great news is when our markets are firing on all cylinders, you can do both very, very well. And there's no reason we can't still continue to see strong IPO and M&A activity. What I'm excited about, that I talked about even 6 months ago, was that this, I felt, was going to be the year of the unicorns. And so we're already seeing this. The trends are happening. I think if we can get these unicorn companies out, it's going to help not only IPO but M&A markets overall.
Is Airbnb going to go next year too?
Who knows? We have a lot of companies definitely interested in lining up. They're all doing IPO preparations, so lots of opportunities.
Bobby, when it comes to private companies, we're seeing a lot of companies raise outside of Silicon Valley. How optimistic are you that we will see Silicon Valley being created elsewhere?
Well, I don't think you recreate Silicon Valley and other places, but I was just down in Atlanta a month ago, and there's a lot of activity in the Southeast. We have board members in the upper Midwest that are excited about the activity there. Even my home state of Arkansas has more activity. I was with a member of Congress from Arkansas last night, and he was bragging about what's happening in fintech in Little Rock, Arkansas. So when we see things like that, I think there's a lot of optimism to be shared, and we hope that's what happens.
Jackie, I'm so curious what's happening in the banking community right now. Really interesting that Uber chose Morgan Stanley and not Goldman Sachs, but Goldman Sachs also not involved in the Lyft IPO. What do you make of that?
I think that, there are a lot of really hot deals happening right now. Who ends up being the lead on that? TBD. In fact, oftentimes you see multiple leads on the covers. That's probably all still being sorted out at this point.
Well, we've reported that Morgan Stanley is the lead on the Uber IPO.
Right, and we will see oftentimes more than one lead ultimately on the cover. You'll have a primary lead, you'll have a secondary, sometimes a third, or behind the scenes you end up with a dozen or more banks behind them. So I think, there's opportunities for everyone. I think that everyone's going to get a piece of these deals.
All right, Jackie Kelly, EY America's IPO leader, and Bobby Franklin, President and CEO of the National Venture Capital Association. Thank you both for stopping by. Coming up, the rise and fall of Bitcoin has been quite a ride for investors and followers, but according to Google, most people still don't even understand what Bitcoin is. We'll talk about the year to come next. And Bloomberg Tech live streaming on Twitter. You can check us out at Technology. Follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Bitcoin's mesmerizing rise and fall in the last year has left investors and regulators asking, what happened? Many are also asking an even more fundamental question, what is Bitcoin? In fact, that was the most searched definition in the US and UK in 2018, according to Google Trends. While on the fringes for investors, Bitcoin gained more mainstream recognition after surging 1,400% in 2017 and then falling 80% in 2018. Here to make sense of it all and give us his thoughts for cryptos for the new year, Blockforce Capital CEO Eric Irvin. So, Eric, I'm curious how the rise and the fall has impacted your company and what it means for demand.
Yeah, well, at Blockforce, we look at the market as really a long-term play. So the entire asset class is really almost a venture asset class. So anything you're doing here, you should be looking at a longer time horizon. We say kind of a minimum of 3 years. But because it's so inefficient and there's just so many operational risks that are yet to be solved for, that creates a lot of opportunity for those investors who are willing to kind of wade in to the shallow end anyways and start to invest in the asset class. And what's nice is because of the asymmetry and the potential payoff, the potential reward is so much bigger than a small allocation. It really presents kind of a nice opportunity if you can do it in the right way.
I have a chart here, Eric, in the Bloomberg showing just how bad the year has been for Bitcoin and other cryptocurrencies. And I wonder how this is impacting your strategy. Are you having any reorganization, any cuts as a result, despite some investors maybe jumping into the shallow end?
No, in fact, we're actually growing into this market. We think this is actually healthy. If you look back, this really just takes us back to where we were in March or June of 2016. So about 18 months ago, it's really just we had this like big run up and then this big blow off, and now we have actually real people in the space building technology, building those on ramps, and that's what we're trying to do, is to build those on ramps. The systematic strategies that we run for our own proprietary strategy, even on Bitcoin alone, we have this alpha predator system. It's up year to date, and it doesn't take any short positions. It's just long or goes to cash systematically. There's very few markets where you can do that efficiently and gain those kind of alpha on a market when it's down 70%. And Bitcoin, Ethereum, like this crypto asset class still presents a lot of opportunity, even just arbitrage across different exchanges. We're seeing almost 40 to 50 basis points a day in just pure crypto arbitrage across different exchanges. So there's a lot of opportunity for those investors who are a bit more sophisticated.
Now, Ethereum Classic down 90%, market cap now about $400 million, which certainly limits liquidity, and yet you're recommending it. Why?
I think Ethereum Classic is one of those satellite positions. So you stick with your core positions of kind of those Ripple, Bitcoin, Ethereum, Litecoin, those top 6 cryptocurrencies, Bitcoin Cash, now with the different forks. And then you start to play around with some of these other projects. There's a lot of really bright developers who have stayed with the Ethereum Classic chain. And when you think about all of these different chains, they're networks. And so you want to go where all the developers' talent is. Right now, there's a lot of developer talent on Ethereum, but the beauty is it's open source. So you can just fork any changes that get added to Ethereum and add them onto the Ethereum Classic chain. So it's, I think, a underrepresented chain. I think it's an opportunity. It's a lot cheaper from a valuation perspective, yet it provides a lot of the same efficiencies that the Ethereum chain is doing, and yet Ethereum is a little bit clogged up right now from scalability problems.
Quickly on the SEC has pushed its decision on one of the applications for a Bitcoin ETF to the end of February. I mean, how optimistic are you about that? 30 seconds.
No, they're not going to approve it in February. A Bitcoin ETF will get approved, I think, in 2019, but it won't be in the first half of the year. So we're just going to have to wait and see on how that comes through.
All right. Eric Ervin, Black Force Capital CEO, thank you so much for joining us today. Coming up, are China's tech goals shifting? And is President Trump the reason? We'll discuss next. This is Bloomberg. Bloomberg Technology. I'm Emily Chang in San Francisco. It is no secret that one of President Trump's aims has been to make sure China doesn't become the global leader in tech. Well, he may be getting his wish. China is considering delaying its flagship Made in China 2025 initiative. The program is meant to push China to the top of advancements in fields like robotics, aerospace, and renewable energy. In its place, China may be focusing on more industry standards. To discuss, Sam Sachs is a New America Fellow focusing on China's digital economy and cybersecurity. Adam Siegel is the director of the Digital and Cyberspace Policy Program at the Council on Foreign Relations. Adam, what is your interpretation of this?
I think we're likely to see a very temporary change of China's description of the policies and not a real change in its actual policies. As you mentioned in the top, that China wants to move up the value chain. It wants to be a technology leader, and it's not easily going to give up those goals and ambitions.
Exactly. So, Sam, what does this actually mean?
We have to think that, remember that Beijing is a master at rolling out plans, not always as good at executing them, and also really good at saying that they're suspending problematic regulation only to have those regulations often creep back in other forms. We've seen this time and time again, so I don't see why this would be any different, particularly when you think about China's technological ambitions. Why are they going to get off that course?
Gary Locke was on Bloomberg earlier today saying something similar. Take a listen to what he had to say.
I don't think that the Chinese are going to back away from their overall plan of wanting to be world-class leaders, because so much of what they use now in the high-tech area comes almost exclusively from the United States. And so when Obama administration and even the Trump administration has threatened to stop U.S. companies from selling very sophisticated chips or Corning glass for cell phones or Qualcomm chips used in cell phones, it would have bankrupted a lot of these Chinese companies. So the message to the Chinese is we need to double down on this Made in China 2025 policy of being more self-reliant on our own manufactured items.
Gary Locke, their former U.S. ambassador to China. Adam, what does this mean for trade tensions?
Well, I think they'll be good in the short term. We'll see some signs, hopefully, that the actual trade conflict might die down, that the markets might be happy in the short term. But I think we're going to have to revisit this issue that the U.S. government is going to monitor closely, but they're going to be back at the table saying that China hasn't followed through on its promises.
Meantime, new developments that massive Marriott hack has been traced back to China and was in fact part of a Chinese intelligence gathering effort, which also led to the hack of insurance companies and security clearance files. Sam, how serious is this?
This is important because this is not just commercial espionage. We're talking about accessing personal data that the Chinese government could potentially use to identify and then monitor individuals that are in very sensitive national security roles. So I think this is a big deal.
So give us some examples of how they might use this information, Sam.
So if you're talking about travel information, say hypothetically you wanted to find out who travels with the President of the United States, you triangulate that with information about financial information, family information. This could be used to blackmail people. It could be used to identify who is in positions where they could be compromised.
Adam, do you expect that this would be just another data point that would rankle the White House?
I think it will. I think we're going to see new sanctions being rolled out this week, primarily directed at Chinese hackers that have been engaged in the theft of commercial secrets to help Chinese companies. I think the issue on the hacking of Marriott and Anthem and OMB is slightly harder for the U.S. because those seem to be driven by national security concerns and counterintelligence reasons, and the U.S. probably does very similar types of hacks. And that is more likely to see some restraint on the U.S. side.
Meantime, Sam, we've got the CFO of Huawei being granted bail in Canada, but the Chinese government, very, very vocally unhappy with her arrest. How does this impact the broader, very tenuous situation between these two countries? Well, now three.
The U.S. government's insisting that this is separate. This is a law enforcement issue which is going on in parallel to ongoing negotiations about the trade war. But the reality is, in this political climate, we just cannot separate them. There are even rumors that Meng might be being held hostage. So conspiracy theories are just building. And if we think about the fact that this week we could get more announcements about cyber indictments, we're looking at a situation where the U.S.-China tech relationship is potentially headed over a cliff.
Meng Wanzhou, the CFO of Huawei. Would you agree, Adam, that it's really impossible to unwind this from the broader situation?
I think it is impossible, and I think incredibly important is the perspective of Beijing and hardliners in China. They're going to see all of these things as connected, and they're going to see them as proof that the United States is really actively working to prevent China's rise as a technology power. And they're going to see reasons to double down on self-reliance, to double down probably on the theft of intellectual property, and the relationship is only going to become more contentious as we move forward.
And what do you expect the reaction in Beijing and in China will be more broadly to backing down on some of these other things, like a massive plan to dominate advanced technologies?
Well, we know that the government was in some ways preparing for this because the Chinese press was told to stop using the term Made in China 2025. But I think we can see that the public reaction to the holding of the CFO from Huawei has been very nationalistic. We've been hearing talks about boycotting U.S. products. So it will be hard for the Chinese government to be seen as stepping back or backing down in the face of U.S. pressure.
So, Sam, what's next, if you could guess?
We could see some retaliation from the Chinese government focused on U.S. tech companies in China. We also, not to end this on a completely bleak note, we might see some concrete measures to give U.S. firms more access in the China market. So let's not write that off entirely. I think this is an administration with Xi Jinping that wants a deal, and clearly we have some leverage here. So let's not write off that entirely.
Okay, what kind of access are we talking about? Are we talking about letting Facebook back into China, or allowing some companies to have a few more meetings on Chinese turf?
We could be talking about lifting restrictions on specific sectors. I mean, potentially we've already heard about maybe the auto sector, the financial sector, lifting the joint venture requirement. The problem with that is the Chinese government has been talking for a really long time about lifting the JV requirement in auto. So is that really making progress? I think some of the things that are going to be more meaningful will play out in areas like standards. Is the Chinese government willing to accept international standards as a way to comply with domestic licensing requirements, for example? What about the cloud sector, where there's a real lack of reciprocity with what Chinese companies can do in the US but can't do in the China market? These are hard, thorny issues that are going to take time, so we need to see, are they showing a willingness to attack some of the structural market access issues beyond the rhetoric?
So many fascinating dynamics happening in parallel. New America's Sam Sachs and Adam Siegel of the Council on Foreign Relations, thank you both.
Thank you.
Meantime, Twitter CEO Jack Dorsey has responded to outrage over his series of tweets about Myanmar. Twitter users called Dorsey's musings about meditating in Myanmar tone deaf and irresponsible. Dorsey was describing a trip to Myanmar where he called the people full of joy, but the military and government there are currently being accused of ethnic cleansing toward the country's Rohingya Muslim minority. Dorsey responded to his critics on Twitter saying, "I'm aware of the human rights atrocities and suffering in Myanmar. I don't view visiting, practicing, or talking with the people as an endorsement. I didn't intend to diminish by not raising the issue, but could have acknowledged that I don't know enough and need to learn more." Coming up, Seed Accelerator Y Combinator, responsible for backing some of the most well-known startups from Airbnb to Stripe. With 2 batches of investments in the year ahead, we'll discuss 2019's tech landscape next. Plus, Amazon plans for a New York headquarters are being met with increasing opposition. Now, some employees are pushing back with plans to unionize. This is Bloomberg. When it comes to success in the startup world, Y Combinator is at the top of the game. The firm backed some of tech's biggest success stories in their earliest days, from Airbnb to Dropbox, Stripe, and Instacart. Since 2005, Y Combinator has provided seed funding, mentorship, and educational resources to now over 1,900 startups. And with 2018 coming to an end, the accelerator is gearing up for its next rounds of funding. Here to discuss, Y Combinator partner Anu Hariharan and visiting partner Holly Liu. So, Anu, I know you focus on continuity. Holly, you focus on more earlier stage. So, Anu, I'll start with you. What are some of the trends you really saw break out in 2018?
I think at the growth stage, the trends we really saw and doubled down on were really in fintech, a lot of innovation in financial services, especially we made a big investment in Brex, which also came through our accelerator. You're seeing more innovation on the digital banking side, credit card side, and I think we'll continue to see that. Second, B2B. There's a big focus on SMBs. There are 5 million SMBs in the U.S. Gusto, one of our portfolio companies, again, really focused on payroll, but offering more services, and I think you'll continue to see that trend. Third, we saw in mobility, right? You could see it in trucking as well as ride sharing, but we also saw in micro mobility, like in scooters. So I'd say from a growth stage, a lot of the capital went into these 3 categories in 2018. 2018.
Now, Holly, we always talk about the obvious YC companies, Airbnb, Dropbox, Stripe, but what is the next generation of YC?
Yeah, so I think some of the next generations, as building off of what Anu had said, was just that we have seen a drop in cameras as well as the pricing of radar. So we see a lot of hard tech become more accessible. So now we're seeing a lot of companies that are using that, and they're going to be able to put in AI. So a great example of this is that we have many, many companies, some larger companies going into trying to build cashierless stores. So you could just walk in, buy your groceries, and leave. So we funded Standard Cognition is doing that, and some larger companies that are doing that as well. We're also seeing that this next generation is now, we've heard about AI a lot, and we see a lot of like, oh, we're doing AI for insurance or AI for this, but now we're actually seeing that they're starting with a problem. We're doing a store now that uses computer vision, and we're putting AI on top of that to help figure out what are the trends that people are buying and such. So that's kind of some of the things that we're seeing. We're also seeing the trend, the next generation for sure will continue to be global.
I want to talk about this. I didn't realize how big YC had gotten abroad, and you've also launched an operation in China.
Exactly, that's
right.
exactly right.
So what exactly are you doing in China?
Yeah. So in China, we hired Lu Qi, who is, he was a Microsoft executive, as well as the COO of Baidu and the premier AI expert. We want to be as accessible to founders all around the world. We want to attract founders who are solving some of the hardest human problems, and that's just not in one country alone. So we decided to expand into, open up in China.
And we actually receive a lot of applications on the early stage side from international companies. I mean, the numbers vary, but 2 batches ago, 40% of our startups in the batch were international. And I think we're seeing more applications from international companies.
So, you know, I've been following YC for a long time, you know, almost as far back as when it was just Paul Graham and Jessica Livingston. Yeah. 1,900 startups. Can you really provide that many startups support, like quality support?
Yeah. So some of the things that we're doing is we take the batches and we break them up into smaller groups. And we've grown the partnership a bit larger, 33% are female. And we go in and we help make the batch smaller, about 25 to 30 companies, and make it kind of the same as it was before, so they can get that advice and that attention that they need.
Now, diversity has been something that YC has in the earlier days been criticized about, but you have made it a focus and have made products. You mentioned 33% partners are women. What about entrepreneurs? You know, what are you doing to?
Yeah, so we have. I mean, we all need to work on the numbers more, right? But last batch, to give an example, 28% of the founders were female, 12% were Black and Latino. But we're putting efforts into not just in terms of founders that are applying, but even before that. We have Startup School now, where it's a step before the accelerator program. You know, more than 10,000 aspiring founders were part of the startup program, so we're putting effort there. We want to get more female founders and people of color into the system, because I think the best part about YC is it is a university for startups, and if we can help support founders from various backgrounds, you know, I think we will see more.
Traditional venture capital firms are raising massive amounts of money. You've got non-traditional investors like SoftBank coming in. I know that you're focused on the earlier stage and you're focused on growth, but does that change the strategy? Does that mean more competition?
So I think one of the beautiful things about YC, and one of the reasons why I joined, is it's super focused on helping the founder on all stages of the company, right? So you could come in with just an idea, and we have a startup school program for you. You could come in and you can have some type of, you're at the acceleration phase, and we have the accelerator program for you. And then we have a Series A program that we launched, as well as the growth program with continuity as well. So I see it much, much more than just a VC fund. It's a place for founders to learn, to apply, and to grow their company and really focus on building value in their company.
And also to give you a sense, I mean, we have, even this batch, we received around 11,000 applications and we accept less than 2%. So there are a lot more founders globally starting companies, because tech is no longer just about tech.
Every company is a tech company these days, or it has to be.
Yes.
We've been talking a lot about techlash and this sort of backlash against big tech in general, big visions, you know, these promises to make the world a better place when, you know, these companies are also making money. Do you expect that to continue, and will that trickle down?
Well, I think that, you know, there's the founders that are starting companies are truly aspiring to solve a problem and hoping to make experiences better. And as we talked about, tech is now entering many different industries. What I do notice in the change in the way founders are thinking is they do think about what will be the impact of the product or the service multiple years long, and what sort of a product or impact do they want to have in people's lives. Because it's very easy if things work, right? We've had consumer companies with moats and network effects. Things scaled really quickly, and it's hard to figure out what exactly are the impacts we're having in the system. And sure enough, we have both positive and negative impacts as we have seen.
Okay.
But we're seeing founders paying more attention to that.
So, quick, rapid fire. What's going to be big in 2019 and not big? Quick.
I think voice as well as elder care will be big.
I think micromobility may not be as big as we thought it would be.
You mean like scooters?
Scooters, but I think B2B and financial services and international companies coming to the U.S. will be a big trend.
All right. We'll keep our eyes on Y Combinator. As always, Anu Hariharan, Holly Liu, partners at Y Combinator, thank you so much for stopping by. Still ahead, while Amazon looks to drum up support for HQ2, workers are pushing back with threats of unionization. How employees describe working conditions next. This is Bloomberg. A group of employees at Amazon's Staten Island Fulfillment Center have now announced their intention to unionize. In interviews with Bloomberg, several employees compared their treatment to robots, citing safety concerns, lengthy unpaid security checks, unreasonable hourly quotas, and insufficient breaks, among other problems. This is the latest complication in Amazon's massive HQ2 plan in New York City. Critics have raised objections over the deal's lack of public review and potential impact on transit and rent prices. Meantime, Amazon has even hired lobbyists to drum up support. Here to discuss, we've got Bloomberg's Josh Idelson, who has spoken with Amazon workers and covers workplace issues. What exactly are these workers trying to change by unionizing?
Employees I talked to discussed production quotas that they say are unreasonable and ever-changing. One described it as a finish line that keeps moving for the amount of stuff that they have to move. She said she's insulted by these power hours the company has, where they try to get you to work even faster to win a raffle ticket. People said that...
Hang on, power hours? How does that work?
Well, the company says that they have a positive culture where they have incentives that motivate people even more, but a woman I talked to said that she finds it condescending, that already workers are in physical pain from the amount they have to move their body each hour and these goals that keep changing, and then to be told this is a power hour, try to get this raffle ticket, she said, is patronizing.
So here's a quote from one of these workers. Jeff Bezos needs to come to the Staten Island Fulfillment Center to speak with his associates to see how we're being treated firsthand. We are not robots. We're human beings. We cannot come into work after only 4 hours of sleep and be expected to be fully energized and ready to work. That is impossible. I feel like all the company cares about is getting their products out to the customers as quickly as humanly possible, no matter what that means for us workers in the end. What is Amazon's reaction to this?
Amazon says that it has a positive workplace. Amazon says that it respects people's right to unionize or not unionize, but that it prefers having what it calls a direct relationship with employees without a union. And this came up again at a city council hearing where Amazon officials said again that the company respects people's organizing rights.
So how will this impact the HQ2 situation?
Well, this is a fresh challenge for Amazon because there's already been serious opposition, including from a number of community groups and Democratic lawmakers, about the deal and the potential billions of dollars in money that the company is getting from the government. And what the union these workers are working with has told me is that their view is the mayor and the governor now are responsible for protecting the workers that are stepping up to organize from being retaliated against.
So this from Amazon. Amazon maintains an open door policy that encourages employees to bring their comments, questions, concerns directly to their management teams for discussion and resolution. We firmly believe this direct connection is the most effective way to understand and respond to the needs of our workforce. Is there any expectation that Jeff Bezos might pay some of these folks a visit?
I am not aware of any plans by Jeff Bezos to come visit out there, but it is striking to see some of the employees at this quite new, couple-month-old facility in Staten Island coming forward by name, being public, joining people opposing Amazon's effort to build the facility in Queens, and joining them and saying, look at all the problems we have already where we work.
How much can local governments do legally to actually help unionization efforts?
Well, in the private sector, federal labor law preempts and restricts local governments in some areas about directly making regulations that would make it easier to unionize. However, there are loopholes where the government's own money, the local government's own money is involved, and it can say it has a proprietary interest. There they have somewhat more leeway.
If Amazon workers succeed at unionize, would this impact prices? Would this get to the consumer? Would this affect delivery time?
It would be a huge transformation, and one that unions would say would lead to more productivity and better policies in the workplace, and people being able to buy more of the goods there, and that anti-union people would say affects Amazon's flexibility. And Amazon, in training for managers, has said that it could hurt the security of people's jobs if the company isn't able to be as nimble because there's a union. Those are videos that have drawn attention from Bernie Sanders and Elizabeth Warren, who say they may be illegal.
All right, a story we will continue to follow. You will continue to follow for us. Josh Adelson, Bloomberg Tech, thanks so much. That does it for this edition of Bloomberg Technology. We will be back here tomorrow.